Well, he did it. Jerome Powell took a big, hot, steaming dump on the stock market. The Fed, not surprisingly, raised the funds rate to 75 basis points. And then Jerome Powell came out as about as hawkish as he could be. We're going to get into that here momentarily. Before we start up, nothing we say today is financial advice. Do your own research when it comes to any of your investment decisions. Please like today's stream, subscribe to our channel, and if you find it informative, educational, maybe a little bit of both, please share it as far and wide as you can. Kev, yesterday we had the FOMC meeting. We discussed on Monday that it seemed very likely that it was going to be a 75 basis point hike. It's exactly what it was. They didn't pull any punches. They didn't try to soften it for the midterm. None of that, crap that people were speculating that just no way that was going to happen. Like, I think people need to realize that the Fed is not beholden to any one political party, right? Like, just because Biden renominated Powell to be Fed chair doesn't mean that he has to answer to Biden. So there's a lot going on there. What were your thoughts as the day unfolded yesterday?
Yeah, so I wasn't surprised by the 75 basis points. Again, that's something I think we all saw coming. I think a lot of people were just betting on the fact that he was going to be more dovish going into this 2:30 meeting that he had. But obviously we didn't get that, and I think that aligns with the macro and a lot of the other news that currently exists right now. So I think, again, this just further indicates that we're in a bear market, deep bear market, and things are going to have to get worse before they get better. And I think Powell pretty much said that yesterday.
Yeah, in the past we've seen this trend where the number would come out. There would be that half-hour gap. There would usually be a lot of movement to the downside before Powell spoke, and then it would pump back up. But yesterday was the inverse. The market got that confirmation of 75, which I think made a lot of people believe, like, okay, he's going to come and signal that we're going to slow down on raising rates. So market pumped. He came out and said the complete opposite, and the market the volatility was pretty wild. Like, if you were listening to his presser while watching TradingView, you could see, like, based on the tone of every sentence, the market would move down how severe his tone was. Like, it was pretty funny to watch. And he made it very clear that, like, it's very data driven. I think what really got people was when he said that it seemed like their chance of having a soft landing was very, very slim at this point. So I think a soft landing isn't happening. It is going to be, as hard as it can get. It's going to be a pretty hard landing here. So not surprised at all by the severity of his tone. And we should have, we have the next Fed meeting middle of December. Before that time, we'll have 2 runs of, employment reports. We have one tomorrow. We'll have 2 CPI prints between now and then. There's actually going to be the December CPI print the day before they announced the rate hike. So it's going to be really interesting. So let's get into tomorrow's job report. And I think that's going to go a long way into impacting the market for yesterday or for tomorrow and the coming weeks, right? Like, I looked it up just before the show. CME Group, who has been very accurate in their rate hike prediction, has it basically 50-50 right now between 50 and 75 basis point hike in December. And it's my belief that the number tomorrow that we see for jobs added and the unemployment rate is going to dictate what direction that swings in. The current expectation is 200 jobs added last month, which would be down from 263 in December. If we come in at expectation or below that number, I think we'll see the odds. We'll start to see a 50 basis point hike priced in, and the market will react favorably. If we see a few months ago, we saw the expectation like 250, we got like 475. If we see a huge jobs number come in tomorrow, then we are going to see a lot of panic in the market.
Oh, definitely. It's going to be, it'll be like the one day when we got the CPI data, just dropped 1,000 points easily for Bitcoin.
We'll see the S&P, we'll see NASDAQ, we'll see everything go down if we have a big jobs number. But like I said, if we come in at, or say we only added 150,000 jobs last month, we could see a very nice day in the market tomorrow. So I think that's something to be, keeping an eye on if you're a trader. And, outside of that, we did have some earnings today as well. Coinbase earnings came out. Transaction revenue down 44% quarter over quarter. That's going to happen in a bear market. People aren't transacting as much. You don't have your friends texting you like, hey, should I buy Bitcoin? So they're not going to get their fees. A positive, though, which there was a positive, which is that subscription and services revenue increased 43% quarter over quarter. So that's a good thing. They have their Coinbase. I think it's like Coinbase One, where it's $30 a month and it's no trading fees. So it seems like people are taking advantage of that. And then also on the earnings side was PayPal, who did, they missed most things on their that they were expecting. And the current aftermarket on that is down about 6.6%. So not a good quarter for PayPal. We're just starting to see that people are not spending as much. There's not as much liquidity in, decentralized exchanges, which should not be a surprise to anybody. Any thoughts on the Coinbase earnings?
No. I mean, it's pretty run-of-the-mill for anything during the bear market. Crypto volume is way down compared to months prior. I think Coinbase is doing a lot. We'll get into it later in the show, trying to make up for how much they've been hurting this entire bear run. But that's pretty standard, I think.
Yeah, and they're actually trading higher in aftermarket. I have to assume that's because people were expecting this miss in revenue, but they're happy with the subscription revenue that they're seeing. So, long term, once we eventually get back into, a normal market, bear market, I think people are still going to be placing their bets on Coinbase as that moves with the crypto markets. So let's keep moving on for a market news for the week. We have Apple pausing hiring new employees amid recession fears into next year. Where do you see that impacting the market?
I think it's just sentiment. I think we're going to see a lot of companies following suit. As rates increase and these companies are, people aren't just going to be buying products of Apple or any other tech. It seems anytime soon, we're just going to see the need for it kind of decline. And I don't think that they're just going to see the earnings. The entire market's going to have to shift, or, that pivot that everyone was looking for yesterday is going to need to come in order for people to feel confident in hiring again, or at least in mass hirings.
Yeah, I think it's going to be many, many months before there's a reasonable chance of a pivot. You still got December rate hike, probably January, February, maybe even March of next year. And then before they pivot, they're just going to hold, right? They're not going to, and not increasing in my opinion, not increasing rates and just staying still is not much of a pivot. Once they are ready to actually reduce the rates, that is a pivot. And then also on the earnings side of things, Robinhood reports a net loss in Q3. Not surprising. That was one of those where it did great when everyone had extra stimmy money that they were putting into their Robinhood accounts. But now that is not the case and people are tightening up, Robinhood not looking too hot at the moment.
No. I saw there was an article, I think, on Yahoo News that was saying that people are cautiously bullish on Robinhood at the moment. I mean, it's not a bad price technically, but I don't know. I personally don't like Robinhood. I never used them, but I think
what are they down to right now?
Let me check. I believe what's their ticker? Hood, right? Markets.
Let's see.
I think 30 cents, 33 cents.
Just Hood. Yeah.
12.33.
Okay.
Not terrible.
They actually had a decent day today.
Yeah, it was down 4.3%, and then it shot up 4% after the report yesterday. So people are somewhat not losing hope in it.
Okay. I know you had a lot of other things you wanted to touch on as well with Coinbase and XRP. So why don't you dive into that?
Yeah. So came out the other day that Coinbase is filing a request to support Ripple Labs in the lawsuit against the SEC. It's pretty much an amicus brief in support of Ripple. They're mainly in support of their fair notice defense, which is pretty much that the SEC didn't give Ripple enough time to know that they were in violation of securities law. If you aren't familiar with the XRP versus the SEC case, pretty much the SEC is accusing Ripple Labs of their token XRP being a security and that they're using funds from the token itself to fund the company. And they're accusing Ray Garlinghouse and someone else in the company of potentially making money off of it, millions of dollars. XRP is fighting back, counters going, saying that they are technically a virtual currency. So the SEC has no jurisdiction over, any of their assets or XRP token. So it's been going on for a long time. They launched the lawsuit in December 2020. It's interesting now because in the past few weeks, we had a lot of developments that are pro XRP, pro Ripple. So it seems like either it's going to end in the SEC losing this case or they're going to end up settling, which most likely it's going to be a settlement. And it's going to bring a lot of clarity to the crypto space. But the main thing I saw from this Coinbase getting involved is I think they really want XRP relisted on the exchange.
Yeah.
XRP has been a top asset for a long time. And I just looked at the market cap. Currently, it's at 22 billion, almost 23 billion. So, I mean, that's a huge amount of money that could be being traded on Coinbase. And I think that they're so close to the end that they're just hoping that they could potentially just get that settled or get them to win. And then they could relist that token instantly. Because it's already listed. It was listed on Coinbase and they had to delist it back in like January of 2021. But I think that's their main motivation into that.
Okay, let's keep moving. There was a good amount of crypto news in the last few days, and some of it quite positive from a long-term standpoint, right? Like, I think you and I both agree over the next 18 months, like things are probably not going to be great, but long-term, a lot more to look at. One of those pieces of news being that Meta is going to allow the minting and sale of NFTs directly on their platforms, Instagram included, and that is going to be on the Polygon blockchain. And we've seen, we've talked about Matic on the first show. We've talked about it on our other shows that are non, stock and crypto market related. But, it just seems like Polygon has so much momentum right now between the Reddit NFTs, between Starbucks bringing their, loyalty program onto the NFT front and all on Matic. So there's just so much positive there. We have, it's been a nice week for that coin. It's up to 96 cents right now. It saw a spike up to $1, but bounced right back down. But I mean, on the week, it's up a nice amount. And I think we're going to continue to see that long term. I think this is a good option. And as a token that's not, particularly expensive, I think this is a good candidate to just dollar cost average in. And in the long term, good things can happen.
Yeah, I'm definitely long-term bullish on Matic. I think it's a great blockchain. It's super fast too. And I think the fact that, like you said, it's super cheap at the moment, technically, I think that intrigues people. Not everyone can buy an ETH, but people can buy a bunch of Matic. And I think that intrigues people.
Yeah. Yeah. And I mean, we've seen all-time highs, up to $3 on that. And that was with not nearly as much going on with the actual token. And like, there's a lot more use case for it now. So I think that that's another one where, it's not going to 5X overnight, but long-term, a lot of positives. And from everything that I've heard, their business dev team is very strong, very professional, and they're just kind of at the forefront of integrating cryptocurrency into day-to-day life, which I think whoever can do that the best, I mean, I want to bet on that team. And so that seems to be Matic right now. So I kind of got a little bit lucky. I bought some Matic a couple weeks ago, as well as some Chainlink. So I was very happy with how that has gone so far.
Nice. Yeah, definitely two projects that are very good.
Yeah, and those are ones I'm just looking to hold on to for a while and keep accumulating. What else are you seeing, out in the markets right now that you want to discuss?
So I was looking at a lot of just trends in the market. And one that I was finding a lot was a couple of altcoins, Link, Cardano, what other ones? I believe VeChain, Harmony One, Solana. A lot of them have been trading sideways for a good period of time. Like the last major move I've seen that was a trend move was June 15th, where they bottomed. And that was on the back of the Terra Luna Classic crash when that got depegged.
Yeah, so that was like that perfect storm of Terra Luna and then Three Arrows Capital liquidation. And I mean, talk about like multiple black swan events happening in the course of a few weeks.
Yeah, it was arguably, it was just a mass liquidation event. And what was it, like 48K down to 26 in a matter of a month or something like that. Let's see, I'm gonna pull up Chainlink right now. All right, so we're gonna look at Link right now. And you see my chart?
There we go.
Wonderful. All right, so I was just looking at this. Here is June 15th. This is technically the bottom so far. And we've just been trading in this back and forth, up and down, back and forth. There's a couple other coins that have been doing this too. Let's go to ADA, USD, pull that up on Binance US. This one's been doing it more so. It's actually fallen down a little bit more, broke out of this. So it's going under. And then let's just look up VChain. They're all kind of moving sideways. And if I go back to Chainlink, I'm going to put on the Bollinger Bands. The Bollinger Bands pretty much just show expansion and contraction in price action.
Okay.
And what we're seeing here is on the daily, there is major contraction right here. It's super compressed. Whereas if we go up here to breakout areas, you know, it opens up. But since it's been trading in this one area for a long period of time, I would anticipate that there's going to be a move either up or down at some point. Looking at the stochastic RSI on the daily, looks like it's going down. And if we look at
so you're saying it's not going to just trade sideways forever? It's a very bold take, Kevin.
Unfortunately, it's not, because people will need to win and lose in this game. The weekly, it's very overbought. I anticipate some break. And if there's going to be a break, it looks like it's going to be to the downside in terms of macro view. Still super bullish on this coin. I think it's a great project, but there's definitely a good chance that we could see a lot of these coins break down soon.
Yeah, for sure. And there's plenty of catalysts to come with that. As we mentioned, we have housing data or employment data tomorrow. We have inflation data next Thursday. We have the midterm elections next Tuesday. So there's a lot happening right now. I'll be curious to kind of dig into what we can expect to see based on how the elections go on Tuesday and that impact, on the markets.
Definitely. And the last thing to add about that was the continuation patterns. Usually those follow the way of the previous trend. And since the last trend was down, again, I'd anticipate that trend continues.
Okay. So are you, how are you trading things right now? Are you actively shorting it? Are you in cash at the moment? What's your game plan?
So my plan right now is just I'm in cash. I feel like in the past few weeks, the only people that have been winning are the people sitting in cash or liquidating everyone else. There's just been tons of liquidations in the space, as we saw yesterday with that Darth Maul candle that went down, up, and then right back in the middle. Sitting in cash, I do think there is going to be some type of bounce, like a short squeeze. I think there's a lot of shorts opening up right here. But I'm not, even short term, even though if I am bullish, I'm not going to enter the market.
Okay. Oh, there's my son.
There he
is. Yeah, I'm still kind of just, I have my positions that I want to be in at the moment. I'm just kind of holding steady there. I don't feel like, on the stock side of things, I've held for so long. I don't feel like realizing any capital gains at the moment and having to pay taxes on that. So that's where I kind of sit with the stock market at this time being. And then crypto just, slowly dollar cost averaging, accumulating, not trying to, I can't play the game that you can play and that these other technical people can play, because that is a losing proposition for me. And so, to try to day or swing trade is just not my cup of tea. So I'm just kind of hanging out right now and trying to learn as much as I can and, see where this takes us, because it's been very interesting. I know you also had in our show notes talking about the DXY.
yeah.
Can you dive into that a little bit more as well?
Definitely. So the DX, let me pull. I'm just going to share my screen once again, and we're going to look at the DXY on TradingView. So the DXY is the US dollar. It's its strength against other assets. And the dollar has been very strong. It's currently at 112. And I hadn't been anticipating a pump recently. It was technically oversold or undervalued at this area down here. Let me pull this up. It was under here and on Wednesday. And you see that it's starting to move up, and then the assets start to fall, as we saw S&P, NASDAQ, Dow. As the dollar goes up, risk assets always fall, and vice versa. So when the dollar falls, risk assets go up. Can't speak today. But yeah, I anticipate this to bounce a little bit. It looks like it's going to overbought or overvalued pretty fast. So this 20 EMA might be a good support level. Where is that right now? That's at 111. Maybe go to the weekly.
Do you ever trade the DXY, or you just kind of use it as a reference point in your crypto trading?
Yeah, so this is 100% just a reference that I use. It's an indicator. If I see something is overbought and then the DXY is oversold, then I know, okay, there's probably going to be a good momentum swing of the two. So for this right now, I would say it could potentially come back and retest this, but that's also saying that the weekly is almost completely oversold. So I think that there's a good move up in the coming weeks. This might be the last move. It could not be. All I know is that I would be anticipating to see this go up in the next few weeks.
Okay. You expect that to coincide with then obviously crypto and risk on assets
100%.
moving to the downside? Yeah,
exactly. And that might be, the capitulation event that I'm anticipating, or it could just be another, lower low in that, or even a double bottom. It really depends. It's a tricky market right now.
Yeah, it's yes, risk assets down. That is most likely going to be the case unless we get some very surprising, one of these days we're going to get a good reading on inflation and jobs, maybe, or maybe not, or maybe we just forever have 10% inflation, and at some point the Fed just has to give up. So who the hell knows? But it's certainly an interesting time to be paying attention to these markets, and if you can survive these market conditions, you can survive pretty much any market conditions.
And again, another thing that I should add is the Fed wants, the velocity of the dollar to go down, meaning how many times the dollar is spent in the market. The more people are holding on to their money, not making transactions, the inflation will go down. But that ultimately means that people aren't spending money and the markets are going to come down as well. So I feel like because the DXY might be pumping a little bit is because people are sitting in cash at the moment too.
Well, and we've seen that as earnings have come out of, people just transacting less. I think eventually we'll see that, affected I cannot talk at the moment. We'll see that play out in the jobs numbers as well. Like, I think people are concerned about losing their jobs. People are losing their jobs. Eventually, we're not going to be adding at the same rate that we had been, within the last few months. So, there's that, and it's really all we got for today, I believe.
Yeah, it's bleak, but if you know how to play the market and if you stay in it long enough, there's good opportunities, I think, just around the corner.
Yeah, as the saying goes, like, the market is a way of transferring wealth from the impatient to the patient. So just have that patience, have a investment thesis and stick to that even when things are tough. And if you're invested in companies that have, strong underlying principles and good business models, then you're going to be fine.
Agreed.
And don't buy NFTs, probably. Not at this time. It is bloody over there too. Okay, Kevin, anything else that you are keeping your eye on tomorrow and into the weekend, before we head out of here?
Liquidation levels. That's all I'm going to be watching.
Okay. Can you pull that up real quick and kind of talk us through what you're looking for there? Because I'm for my own education than anything else.
Gotcha. So let me just pull this up one more time. We're going to go to a wonderful site called CoinGlass.
Pablo, no art gobbler. No, none of that. None of that nonsense.
All right. So let's go to CoinGlass. All right. This is funding rates. Technically, I'm going to show you this real quick too. Funding rates are pretty much what leverage traders are doing. So if you see it in green and it's under, like 0.01, that means that there's a lot of shorts opening up. And that means they're fueling a lot of what would be a short squeeze. If you see it in white or red, that means people are going long or short, and that means the price will switch around. People are going long, so the price will probably come down. So that's just a small tool that I use there. But Coinblast has all this stuff. It's a great site. You can go to liquidation, and it gives you pretty much all the liquidations across the markets. So let's go to the 24 hours, and we can see how much this market has lost in the past 24. So this is down. Earlier in the day, it was at like 164 million since yesterday's Fed talk. But we can see that in the past hour, there's been almost 2 million lost in the whole market. We've seen 11.21 million lost in the past 24 hours for Ethereum, 9 million for Bitcoin, and 6.7 for Doge. So there's been tons of money just being transferred. People are going extremely crazy with leverage trading. And when you leverage trade, a lot of these institutional wallets, these whales are able to see where you're going. So what are they doing? They're going to bet against you always. And some of these places are actual exchange wallets. Like FTX has Sam Bankman-Friedman's. He has Alameda, which is his investing firm. He has all this data. He knows where the markets are. So what's keeping them from liquidating people? Do you know what I mean?
Yeah. Yeah, this is why I have never and I will never trade with leverage, and why I probably won't trade, period. And I can't say it enough. Like, if you are one of these people who is just trying to, make a quick buck and you're just a degenerate at this point, like, leverage trading you're going to get wrecked. Like, odds are slim you're going to come out ahead in this. Like, you're going to get wrecked. I
mean, right here it says 1 hour wrecked, 4 hour wrecked. This is like... It says it right there. But it was crazy. Since yesterday, the 24-hour for liquidation levels was, let's see, Bitcoin was at 25 million, Ethereum at 42 million, and Doge at 11.5 million. Like, those are unsafe levels. That's just, people are getting destroyed in this market.
Yeah. Yeah. Don't mess around with leverage, please, people. Like, if you got to get your fix in, just go to local casino and, like, play some roulette or something at that pace. Like, you got probably a better chance there.
Yeah, definitely. This weekend, I wouldn't be surprised if we see those numbers high up again.
Yeah, for sure. Okay, so I think that about covers it on today's show. Thanks again, Powell, for that. I think it was a much needed dose of reality. It just seems like the market doesn't believe what they say, and like, I think he had to be very severe with his language there. Like, we can't slow down. Like, we can't turn this around. We got to keep pushing forward with these rate hikes, whether you guys like it or not.
Yeah, it's very much needed in this market.
Yes, it is. Jobs numbers tomorrow morning, 8:30 a.m. Eastern Standard Time. We kind of touched on that at the beginning. If the jobs number is very high, the market is going to go down. If the jobs number is below expectations, market's probably going to move up. So kind of the opposite of what you'd expect to see, but that is the state of where we are for the time being. So thank you very much, everybody, for watching. Please like the stream, subscribe to our channel. We appreciate it very much. For Kevin, I am Jeremy. We will be back on Monday to recap the weekend and discuss what we're looking ahead to in the coming week. We will see you all next time.
Take care, everyone.